What's up, listeners? This is our first podcast. We're gonna call this podcast the Bull Movement. It's a kind of a play on the stock market, obviously. Stocks always go up. That's what we're always gonna keep saying. We can kind of bring this podcast in any kind of direction, any shape that we want to go in, and yeah, we talk about a lot of interesting stuff in our first one. Just kind of a lot of little introductory into the personal finance game, and take a listen, see how you like it. It's our first one. We're gonna continue to build, continue to learn. You might agree with some of the stuff that we say, might not, and yeah, let's go on a little, small journey together, see how big it gets, and just use it as a learning opportunity.
Yeah.
So let's dive right into it.
Let's get it, baby. Hope you guys enjoy it. Let us know if you guys, get any value from it, and hit us up, give us some suggestions. I mean, we do this live. We do it on Twitch. And then we, obviously record it and upload it to all your major podcast platforms. And so you'll kind of hear us interacting with people on Twitch, on our Twitch channels. They'll be asking questions about different stocks. We'll kind of go all over the place, review some stocks, kind of go all over. Like Christian said, we can take this thing anywhere. But yeah, guys, if you got some value, hit us up. And we'd be happy to hear from you. But hope you guys enjoy the episode. See ya. But energy's just wild right now. I don't know. Energy, oil, it's
I think oil's kind of shaky right now.
Oil's just like bad news, man. Just
because I think that with the upcoming election, and that obviously anything that we say, especially on this podcast, is purely from a financial standpoint.
Yeah.
With the upcoming election, I think that's going to have a little bit to do with, where oil is going to take a turn. I think that short term right now, oil improved at the end of the week due to the United States, I think, dropped by about 400,000 barrels a day of supply. And with the hurricanes coming through Florida, I think that could definitely raise oil prices. But other than that, long term, I don't see a significant increase in oil, with, just how progressive, the United States is trying to become, I think, in those ways, right? And I think, also, what I also saw was that with oil specifically, anytime there was a crash, I don't know when it was, since maybe 1990s or whatever, that it never reached back to its full potential as to where it was pre-crash levels. So it never fully recovered. You know what I'm saying?
Mm-hmm.
And I think that's a big thing to key in on, at least, is that it never fully recovered.
Yeah, I mean, I feel like there's just a lot better places that you could have your money.
Yeah, there's a lot better places with more return and probably less risk.
100%. Yeah, so, I mean,
I would definitely rather be in, in tech stocks right now rather than oil, for the next 6 months.
Mm-hmm. Yeah. I mean, and tech, especially tech coming off of, it's been about like a 12% pullback, I'm pretty sure, the tech sector, at least in the FANG stocks. 12% pullback. I think that's, I mean, if you're looking to get into it, tech could go back. You could see 15%. I mean, they raced up like in the summer, but you could see a 15% more drawdown, and it'll still be choppy up until election. But I still feel like tech is going to have some room to run when everything gets shaken out here in the next couple months.
I would agree with you, BJ. This is kind of sick, dude.
Yeah, this is so gnarly.
I like this.
So AJ, you said that the company has a pipeline they tried to shut down, but it's safe through the end of 2020. Yeah, I mean, I think honestly, you're sitting on profits. You just hit the dividend. So you never know what could happen with this election. Chop. Like the stock it's not like you're in a tech stock or something. You could see some tremendous upside for the price of the stock. That's why a lot of these stocks, if they have a large dividend, it means the company is probably hurting, especially energy, oil, like we just talked about. So I would probably say you just got your dividend in August. You might want to look to just reposition it into something else. might have more upside.
And I think one of the biggest things too, Brandon, is that profit's profit. You know, like no
Profit is
matter,
profit.
like if you're taking, 10% gains, 50% gains, if you want to buy back into the stock at a later date, like I said, we've had this conversation before. You're just going to pay a premium on it, but you also took less risk because you made profit, right?
Yeah. Yep.
That's just how it goes. You're just going to pay a premium if you want to get back into it if it starts popping off, and that's essentially what would happen.
Yeah, exactly. So Blake just said check out ZSAN if you want to look that one up.
CSAN.
Pharmaceutical company.
Now I'm not big on understanding the pharmaceuticals as much.
Pharmaceuticals to me are just you're just hoping for a pop to present the contour.
Yeah, you're just hoping for a pop, related to the coronavirus, related to, PPE.
Some kind of approval. It's just like
Yeah, all really news based traded, not like a consistent.
as a concern around beliefs. So Blake said his friend just put a lot into it. He must have some insider.
Yeah,
Um,
someone probably told it. Like, you're not just looking at this company, on a random weekend, and you're like, yeah, let me put, $100, $1,000 into it,
1 year target estimate of $4.33. Is that $1.78? And then also these like analysts and these target estimates. It's just at this point in time, I feel like it's just a bunch of BS. They're
whole
just
bunch of
playing.
guessing, man.
Yeah, like and okay, someone has a price target. Like just the last week, someone had a price target on Tesla for like 280, right? Just bumped it up to 400, like, and they called it at 280 in
Yeah.
like August.
Yeah, like 33% in what, 1 month.
Like come on.
Yeah.
But I'm interested to see what Battery Day brings on. What's gonna happen, right?
I mean, Tesla's Tesla, right?
And so we've seen, a lot of these product announcements you'll see like with Apple and stuff, right? Like we saw this week, there was from just the investors, from the shareholders, we saw a sell-off, right, on the back end of the Apple event. Now, I feel like this could be a sell-off. They introduced the fitness, so the service-based, the fitness subscription, which I think is going to be huge. It's just a start. I mean, they have unlimited growth there. And that's just going to be recurring rev, which is going to be great. Add to their software. They've obviously been, from the start, dominating in the hardware aspect, but over the last few years, you've seen them really push into software, and I think this is just adding to their software arsenal. So I think it's going to be good, and I think the sell-off, in my opinion, might be because obviously the phones weren't announced, but I feel like that was already baked into the price. People knew that the phones weren't going to be announced on Tuesday, but this could just be a healthy pull, continuing to pull back from its August highs, going into a push-up when they do announce the phones.
And I also think, BJ, is that there's a lot of volume, a lot of volatility within Apple specifically, right? So anything, no matter how small of an impact that it may have had, I think it could have made, some pretty big changes into the stock of Apple.
Mm-hmm.
So like I was talking to you beforehand, on a blog post that I saw of just, people who enjoy Apple tech, they were talking about how Apple typically in their events, right, they would have their event, go through it. It'd be really, elegant. They'd have music going, and then afterwards they would say something along the lines of, "Oh, wait, we have one more big thing, right?"
Mm-hmm.
And with this event, that big thing never came, right? It wasn't what didn't feel as smooth. So I feel like even though those micro things that happened, I think had a bigger impact than people, may even think
Mm-hmm.
on Apple stock, especially, at the end of the week.
Yeah. And I mean, you also have to take into account right, like, I mean, Apple ran up to $134 September 1st. I mean, we've had a pretty large pullback since then.
Yeah, that is a pretty significant pullback.
to the beginning, right? Basically pre-split levels, like pre-split announcement levels. Which in my opinion, I feel like larger players, buy on the news after split, buy on the news of the Apple event, and then just continue to let it pull back. I feel like it's pretty healthy, honestly.
I mean, it's Apple, right?
I'm still I'm still bullish on tech. I mean, I know there's a lot of people that are like, these multiples are out of hand, but I've seen a lot crazier multiples, like this PDE ratio of 32.42 on Apple right now. I see a lot crazier right now. Like, and this is Apple, right? I mean, we're still $3.30 earnings per share at these levels. Like, come on.
Yeah. Man, it's just, you just see, the way the market's moving right now, and what the Fed just announced with they saying that they don't want to increase interest rates till 2023. Yeah. And it's, man, just with all it's hard. It's, in my opinion, it's not necessarily that it's hard to be bullish, but like, you got to be at least a little speculative on just the fact that, money's going to be so cheap. Mm-hmm. Money is going to be so cheap for the near future.
Yeah.
And with just that, that's you're going to see. I feel like we're going to see inflation. I think we're going to see inflation rise a little bit. I think that we're also going to see. I think we could easily see a pullback in the market as well, just because of. I think that a lot of companies and just Americans may be in debt.
Yeah, I mean, I mean. Then you got to think about it. Okay, it's like, and so that was where it was interesting. It's like, okay, I'm looking at, obviously tech was the biggest, like, run up out of the bottom of the market. When we hit the bottom of the market in March, and the potential bottom, who knows? It could go. Yeah. We could see a a re-bottom, right? But we saw tech run up fastest. And yeah, that was the stay-at-home movement, right? Virtual, all this, everything, right? Pushing those stocks up as the quickest to rebound makes sense, kind of. Yeah, makes sense. But a lot of it had to do with pushing interest rates down and saying, hey, we're going to keep them here, right? And so that, okay, now we've got to put our money where we're actually going to be able to see a return, Yeah. And so, yes, that's why all of a sudden we've seen these huge multiples, and people are saying these multiples are way out of hand. This is a bubble, or is it just you've got to put your money somewhere, right? And yes, you might be a few quarters ahead, right, at these levels, but where else are you going to put your money?
Yeah, I think that that's a perfect time value of money. Just the key aspect of finance where dollar today is worth more than a dollar tomorrow, right? Mm-hmm. So it's just like, the U.S. 10-year Treasury yield, 0.7%. That's nothing on your money, right?
Yeah.
I mean, that's nothing.
Yeah.
With a target level of inflation of 2%, right? Why would you even think about buying into T-bonds right now? T-bill, anything, Why would you think about it?
Mm-hmm.
It's I mean, obviously unless you want to be extremely risk adverse, right? You don't want to take on any risk, but us especially as 20, 21, 22, young people, I mean, stock market's probably going to go up, right? Just a wild guess.
Yeah, I mean, and the thing about it is, like, and what I always tell people is, like, when they're just getting into, like, curious, hey, maybe I should get into the market, they're like, well, I don't know, it's pretty high right now, right? Most people at any time that are thinking about getting in the market are only thinking about it because they see somewhere that the markets are hitting record highs, right? And so they're thinking about, oh, well, I need to put my money in the market. And then all of a sudden they get to the last second and it's like, well, it's at record highs. Maybe I should wait. And my thing is, like, you just need to, okay, say you've got $1,000 you want to put in the market, just put 50. Just put a little bit, because as soon as you put a little bit in the market, it kind of gets you, it gets you to feel like this is actually doable. Okay. So, and it's actually, you made it real. Like, now you are invested, and it's going to make it a lot easier for you to just go in and say, okay, now I'm gonna
doing
put
it.
100, now I'm gonna put
Yeah,
500 because I feel confident now, right? And not confident that you're just gonna keep seeing gains, but confident that you understand. Look, this is a long term play. Like, I think
100%.
I think if you're looking at it for the short term play, you better do
You need to
a
know your stuff.
lot of research and know
You
the
know your stuff.
strategies,
I
right?
mean, like we've been, like Brandon, like you and I have been talking about. Obviously we're trying to figure out the short term game a little bit, and hopefully we do figure it out. But you know, the long
Yeah.
term investor is always going to pull up on top. In the like in the long run, it's not like the long term investor is going to be losing money unless you take your money out.
Yeah.
Stock market's never taken a dime away from anybody.
Yeah.
You
Exactly.
you still have the same amount of stock that you had before. It's just that if you decide to sell off. That's where your unrealized gains, your realized gains. That's what you got to consider. It's just like long term. If you just keep investing, over and over and over again, you're gonna make money, and you're gonna be sitting pretty with the amount of cash that you have. When you just do decide to retire or whatever you want to do with that money.
Mm-hmm. Especially in these market downturns, man. Like, and I personally did not think just what we've obviously pandemic. We've never really had it hit a market like this, and like in this day and age, obviously, and see what it does, right? And so March was new to everybody. When coronavirus came out, it was new to everybody, and we saw the markets just crash, right? And so, but look at this. Like, let me just back this out 1 year. So Apple was at $81, and this is pre-split, by the way. So, well, no, this is split baked in. So never mind.
Yeah, yeah, yeah.
So $81, February 10th, and then it goes down to $57. So like in March, but just how quickly it came out, that was something that I did not think was going to happen. But think about it. February 10th, you're just continuing. You're up until February 10th, like you're just investing in the market, like on a, weekly, monthly, quarterly basis, whatever it is. And then all of a sudden you start to see market crash, and you just don't know how long it'd be. Maybe, okay, yeah, maybe you're like, okay, it's February, market's moved down a little bit. This is sketchy. Let me pull my money out. If you did do that, yeah, maybe you would limit your downside, but you've locked it in, and as soon as it makes one of these run ups like it did, you're now screwed. Like,
And
now,
then
now it's even harder for you to get back in because you're like, well, now I'm getting back in
exactly,
higher than I was. And so,
exactly,
long term, you just got to do long term. Invest in
exactly.
great companies, believe long term.
And obviously everything that we're saying, right now we see it to be, not necessarily 100% accurate, but that's what we believe at the moment, right?
Mm-hmm.
And hopefully we continue to grow and learn from these talks. And it's just like, man, if you just understand that, if you just keep putting your money in, especially if you just understand this, right? You don't have to 100% do it right now. Obviously it's recommended by everybody, but as long as you understand the power of it, after that you can become as risky as you want right now.
Mm-hmm.
Because we're not saying, go, you have to put it into a ETF that follows the S&P 500 right now, because that's extremely low risk, right? Which
Mm-hmm.
is fine. You can have low risk, but right now we can be as risky as we want. The money that we have right now, all it is, it's just cash for the short term, essentially.
Mm-hmm.
With hopefully with long term gains, right?
Yeah.
And it's just like in the future when we are making adult money, essentially, that we'll know what to do with it and we'll know where to put it for those safe bets.
Yep.
And that's where diversifying your portfolio comes in.
Mm-hmm. Exactly. And Blake, you asked, what do you think about crypto? I think crypto, as far as like, if you're gonna get into crypto, I think Bitcoin is the way to go because of Bitcoin's dominance. If you look at the whole entire crypto market as a whole, right? Bitcoin's 92% of the entire worth of the crypto market. So 92%, and digital currency still being so early, it's going to be, I would kind of recommend, if it's, and there's smart people that are really big into crypto, they say you should have at least 2%, 3% of your worth, 1% whatever of your worth in crypto, just because like there is potential for it to be so massive. And if you think about it, if Bitcoin becomes a universal currency, yes, that can be massive. And there's a limited supply, and I'm not going to get into all of that, but it's just one of those things. Like, you could be investing, like we said, weekly, quarterly, monthly basis. And if you want to put $50 into Bitcoin here, $50 into Bitcoin there, there's going to be downturns. Bitcoin's extremely volatile. When the stock market crashed, Bitcoin before was like going inverse of the markets. That's what it would normally do, but it crashed as well. So you have to start looking at that and just kind of be consistent investments along the way. I mean, Bitcoin could go to zero, it could go to 100,000, could go to a million. Who knows? But why not? At least put a little bit of percentage into crypto.
And like we said, right? And any money that you put into the stock market, it's always risky, regardless of what you do with it. But why not take the risk right now, right?
Mm-hmm.
As long as you're financially secure, you have everything that you need, your food, water, shelter, just the essential basics. Why not be risky with it?
Yeah.
Why not put it, if you believe in, you do your research and you're looking at Bitcoin and you're like, you know what, I potentially could believe in this, right? Why not? What are you going to lose? $50, $100. You know what I'm saying? I'm not to say that that's pennies or anything, but it's just like, what you stand to gain from that in 10 years, right? Could be huge.
Yeah, exactly. And I think one of the things that I've learned is when you start, like, when you really believe in something, or like you think you have a hunch for something, it goes back to you as like, you're young, just put something there,
Yeah.
Like, I remember looking at Shopify freshman year of college, and for Shopify, for example, I started getting into building e-commerce stores, right? I looked up Shopify, and I was like, yeah, that'd be kind of an interesting stock. Like, this is actually a good company, right? So September 2017 is when I was looking at it. Where is 2018, because that was my freshman year. So let's see, $164. Could have bought shares at $164. Shopify at its high in August was $1,066. So if you know something about it, if you feel good, you like the company, like, if it's a public company, why not? And that's one of the Buffett's biggest thing is like, invest in things that in companies that are good that Plus, it gives you the confidence, because like, if I see like Blake, for example, when you threw out the Z sand, I've got to really understand this company to like be able to sit there when it goes down 30% and feel good about it. When you don't even understand what you're investing in and it goes down 30%, it's going to be a lot easier to just like say, oh, screw this, I'm out. Yeah.
Yep.
Mm-hmm.
Yeah, I definitely agree with you there, Brandon.
But another thing I wanted to talk about, Chris, is SPACs.
Okay, yeah, I know you've been with your guy Tremoth over there. I know he's always been on it a couple times.
Last couple of days, he's actually come out with, I think,
Three more.
Three more. He's also reserved IPO letters A through Z.
No, really.
Yes. So you could be seeing 26 SPACs coming out from Chamath.
Just you telling me that, what a great marketing strategy that he's sticking with the IPO.
Yeah.
And then adding a letter to it, depending, regardless of whatever letter he wants to attach to it. That's just going to be huge for the marketing mix of getting people interested, looking it up, really easy to see, easy to look up, and I think that could be huge for for the stock itself, honestly.
Yeah, exactly. And so basically, a SPAC is a special purpose acquisition company, right? And so he actually did a SPAC before earlier to take Virgin Galactic public. So that's Richard Branson's space SPCE ticker, that company. And now he's done IPOB as his most recent closing on a SPAC with Open Door, which is basically trying to, the coolest way to put it would be trying to do real estate like Carvana does cars. solely like online transactions, things like that. It's really early, right? But eventually it's going to get to that point where people aren't going to be, going and looking at these homes. It's going to be so easy to like see them and see everything you need to see about a home and be able to, make a transaction. And I do believe that.
And like, I mean, obviously with this, the whole coronavirus and playing into, essentially our everyday lives, right? I mean, that could be, a permanent a permanent thing that's going to happen is that, no longer does the homeowner have to, pack up everything and get out of there,
Mm-hmm.
right? Now they can just, stay at their house, record whatever's necessary, from the company's end, right? And then you can make a transaction like that.
Yep.
And it no longer, needs to be this, long process. And that's just from, someone who's completely uneducated about this, market.
Yeah. I mean, you've already seen a really quick acceleration in virtual tours and real estate. Just because of Corona, like not everybody doesn't want to just be walking in a bunch of random people's houses right now. And so virtual tours are becoming huge. And it's just a start. It's just a start. Soon you're not going to need the middlemen. You're not going to need the realtors. Open Door, Zillow, these big companies are going to be able to handle everything just like Carvana does it. With Carvana, you get on there, you pick your car, and you basically sign the paper right there. And you just go and get your car delivered to your house. So that's what Open Door is trying to do. But as far as the SPAC, it's pretty interesting. Basically, for example, IPO-B basically goes public, right? So they become a public company and they offer shares, right? So they're going to offer shares. So I think IPO-B had about either $1 billion or just under $1 billion market cap. So the shares that they offered, they raised about $1 billion. And so then they go and partner with Open Door. And so they say, hey, we're going to put $1 billion into your company. And we're going to take you public. And so essentially that's what they've done. And now investors can have exposure to Open Door, which was a previously private company. And now with let's just say Open Door is valued at $4 billion. Let's say this $1 billion from IPOB is now going to have 20% of the company, 25% of the company. And now the investors in IPOB are going to be able to have exposure to that 25% of Open Door. And obviously there's going to be, I guarantee there'll be more stock offerings and, things like that. But it's an interesting way to do it. I mean, especially with this IPO game that's going on, is like the SPACs actually help out the retail investors much more than these traditional IPOs. I mean, we've seen it with Snowflake, where Snowflake had talks. I'm pretty sure it was at talks of $40 to $60 per share. That IPO'd last week. That's what their talks were at the beginning. That's what their IPO price was going to be, right? And so how the IPO would work is the banks would underwrite the IPO and they'd say, hey, we're going to pay you $60 a share for all the shares that you're going to offer. And then the company says, okay, good. So that's the money that the company's getting. $60 times however many outstanding shares they're going to offer. And that's the money they've raised, and they're going to put that into the business to fuel operations. Now the banks are going to take these shares public at $60, and they're going to say, hey, it's open to the market now. And so the bank obviously is hoping that these shares are going to trade above $60 and they can make all the profit off of that. Some IPOs go down, right? But what we've seen with Snowflake is it was a very hyped up cloud company, cloud data company. Warren Buffett got in pre-IPO. I think he put in $750 million. There's a couple other big players that got in. And that was obviously that's not like Buffett. You can tell, Buffett's not getting into these cloud companies and pre-IPOs, stuff like that. So I think they were talking like it's his predecessors that are kind of starting to make these decisions with Berkshire Hathaway. But that was just a side note. And so all of a sudden the talks of $60 a share, $40 a share, whatever it was, $75 a share, went up to $80 a share, IPO price, right? And then with the hype, it said, okay, we're going to do it at $120 a share. And then come the day of the IPO on Wednesday, they said the first trade came out at, I'm pretty sure it was 240, 275, 265, $265, right? And so you say, okay, if these banks got in here at $60, $70 per share, and the first trading price was 265 or whatever it was. Let me be sure. Let me look at Snow. Let's see. 276 first trading price. So they listed at 120 the day of, and these banks, and that's what the IPO. So the company did end up getting, from $60 talks to 120. They got the 120. But the first trade came out at $276, right? So $276. Yes, the banks, all the guys pre-IPO, making tons and tons of money immediately, right?
Literally free money, just like that.
Like you talk about Buffett, right? He gets in obviously probably sub 120, and now today it's sold off a little bit, but it's at $240. So that's literally double your $750 million in like 2 days. But the reason why this is kind of like these IPOs are kind of jacked is because, okay, all the smart money, big money, whatever you call it, gets in pre-IPO. Banks take it public. IPOs hype up because any cloud data software company, there's not that much access to them in the public markets. There's just a lot of private companies doing it. And so it immediately pushes up to, right now it's at a $66 billion market cap, and we haven't even seen it trade publicly for its earnings, anything, right? And so, and just to see its valuation double in 2 days, just it's like that. And now these people, everyone's having to buy at the valuation being doubled.
That's almost a little worrisome.
It's a little worrisome. And you saw it with a few other IPOs last week as well, that went out. They were kind of in the same kind of space, cloud, data, whatever. And their talks at $40 a share went up to $75 a share, $80 a share, and doubling valuations. And so it's just something to be like, okay, what is really going on? If that's how much money is going to flow into a brand new company, it's just interesting. Like what does that really mean?
Why is that happening?
Mm-hmm.
Why did the valuation go up so much in mm-hmm. such a short period of time, based off essentially nothing but a couple bids, at the top.
Mm-hmm. And that's the thing, is that's why the SPAC is really making it much better for a retail investor, because I'm a retail investor. For example, IPOC-UN, that's IPOC-U, basically, IPOB. And so IPOC-U is, or just IPOC, is they haven't come across a deal yet, but they've raised money. So it's basically just money sitting there, special purpose acquisition company, and they're going to go and try to make a deal with some company that Chamath, the advisors, people on the board, are going to say this is going to be a good company to take public. And now I've bought in at $10 a share, let's say. So I've got $10 a share of IPOC. Now all of a sudden, they go and take a private company that's like a really great company. Now it's going to become public. Okay, well, I've gotten at $10 a share before we even knew what company it was going to be. So I'm basically like the pre-IPO people. That's the difference. And that's why it makes it so good for retail investors to be a part of.
It's just much easier. I think we've seen this, across essentially. Just like, Gary Vee always talks about, right now is the best time to be a human, right? Right now is the best time to be an investor. Mm-hmm. The ease of access to be an investor right now it's astronomical compared to where it was, 5, 10, 15 years ago, right? You can buy, fractional shares now. You can invest with literally $5. You can invest with literally $5 into, some Charles Schwab, TD Ameritrade. There's no, very little fees, very little cost to just get in.
Mm-hmm.
And, I think that, we're going to keep seeing this. And like I said, I think this is also going to affect the volatility of the market. Just the mere fact that so many people are getting into the stock market, so many people are seeing it. It's becoming such an exposure that I think that it will play, maybe not a major part, but definitely will play some part into, where the stock prices move, as far as, just what people believe, what the average consumer believes.
Yeah, I mean, it's so much accessibility, man. Um, there's money flowing everywhere. It's interesting. That's one of the things that they were talking about potentially led to such that uptick in tech was just enormous options calls,
Oh my
right?
lord, those options are going through the roof. I mean, dude, I I think it was this week. There was a Wall Street Journal article on it. This week, options calls I think exceeded the actual transfer of stocks.
Mm-hmm.
Just options volume exceeded the the transfers. Like that almost
Yeah,
doesn't even make sense if you think about it, right? Nearly doesn't even make
yeah,
sense. The fact, just the speculation of where stock is going has more volume than the actual stock.
mm-hmm.
That's I mean, obviously we're gonna keep learning about it, keep figuring the game out. But I mean that's just wild to me.
Yeah. Yeah. I mean, it's a whole separate game. I mean, I think Robinhood has options trading with no fees as well. So, um, I
Let me try to
the
let me try to find
influx
that
in
article.
Robinhood, um, yeah, people are like hyping it up. I think yes, that is a very big play into the market of more money coming in, right? And they're going towards names they understand, right? Tesla, Apple, like these are companies that people know, so they get into Robinhood and they start buying those companies. Um, but I think it can mess with the big boys too when you start seeing you've got these retail people throwing cash on options, and when traditionally it's been options are the first telltale sign of someone knows something if they come in and they place money on a shorter term option and they place it big, right? And that's how the big money um, knows when to make the moves because they see a move come in on options and like you said, like most retail investors are just looking at this price. Like I'm right now I'm looking at Snowflake, right? I'm looking at 240. I'm not coming over here and I'm looking at the options, which they don't have options on here yet, but if you look at the options, it's a whole nother game. I mean, the amount of speculation, the amount of like you start to see like what the volume is and open interest on certain levels, and this is where the smart money understands when to make moves in and out of the market. And so when you've got even more noise coming into the market, more orders, and the game starts to change a little bit. And I think maybe some of these bigger cats kind of went with it. Like think about it. Okay, you start to see like contracts being traded, calls on Apple, and then at what point do they like okay, well we need to make some calls, and then they place a big trade, and then all of a sudden everyone else it's like just a
And it's just
chain
a
of events.
snowball effect. Yep.
Yeah. So I don't know.
Yeah. I think it's definitely something that obviously we need to continue to do research on, continue to learn. But so I pulled up this article. So so in 2018, 20.5 million contracts, right? 2019, 19.4 million. In 2020, right? 28 million contracts. 28 million contracts. Why? We've essentially, we've been in this pandemic since the beginning of the year,
Mm-hmm.
right? Since March. Why have 28 million contracts? I mean, that's wild to me. That people are, using this platform. I mean, it is risky, right? You need to know what you're doing, but I mean, people are just, going speculative on it. Just putting money out
Yeah.
there.
Yeah. I mean, but then it's like, okay. You're trading options, right? Yes, very risky, depending on what type of trade you're doing. But and it's just all short term. There's no long term exposure. So
Yeah,
is
very.
has are the options increased? Like are the orders, the contracts, are they all increased because there's more short term trading in the volatile market of speculation that there could be a larger move downside? Maybe, but I don't know. I mean, you see the prices push up with it as well. Large volume buying of the actual physical stock. Um, is helping to push all the names up. And this is we're really talking specifically about the tech sector. Um,
Yeah, I mean that's just been through the roof right now.
yeah, but
Oh,
I
it's,
don't know.
it's insane to me, man.
I'm just seeing like so for right now, obviously the last week we just ended on, we've got there was some repositioning of portfolios being done, right? So it's
Yeah, what was that called? Like, what was it? The quadruple witching? Isn't that
yeah,
what
the
they called it?
quadruple witching. Yeah, yeah. So
Where everything expires on the same day.
lots of different terms of options were expiring, and then also um, the hedge funds, the bigger funds, they're having to rebalance their portfolios because you have a ginormous run up in tech, right? But in order for their portfolios to stay on track, they have to rebalance every quarter. And so,
Which is almost like, I mean, almost a little not necessarily counterintuitive, but I
mhm,
don't know if that's the thing that I would want. Obviously, it's the safe bet, right? It's the
yeah,
safe bet that you'd want to play, but I mean, with the amount of risk that I'm willing to take, I mean, tech seems to be where it's at right now.
yeah,
We'll see where it is in a year, 5 years, 10 years, but tech seems to be where it's at. Tesla, Apple, Microsoft, these big companies, Facebook,
hmm,
seems to be where it's at.
yeah. I mean, I think the tech long term holds are like no brainer. It's gonna be good. Um, but as far as larger portfolios, it's like you just have to because you'll see like tech leading a 10%, 12% correction, and if you all of a sudden go 2-3 quarters without rebalancing, all of a sudden 85% of your portfolio is in tech, and
Yeah,
so you've turned in from a
well
semi-balanced portfolio.
diversified.
You know what I'm
Yeah,
saying?
yeah, yeah, yeah.
Um, but so you'll see all these funds, right? Tech runs up huge. Now on Friday, it's normally after hours trading that these big institutions are able to they basically rebalance and stuff. So, um, but that's selling that people have to sell because to rebalance their portfolios, large funds they have to sell. So I think this pullback could have been this rebalancing, could have been obviously seeing a huge push up, and now yes, we still have a election uncertainty. We still have a potential second wave uncertainty. Um, but I think I think the market is honestly in a good position. I think it's a healthy pullback in the tech, like specifically. And so I would look to see still some green days coming in the near future for sure. It'd be choppy though. I mean, election is toss up. Now, what happens
Yeah.
when Biden gets elected? I don't
The
know.
capital gains.
Capital
You know,
gains. So that's the talks, right?
that's
But now when
yeah.
does capital, right? And so it could be a very quick short-term sell-off. But when does it actually occur, right?
But it doesn't.
You
It
know,
doesn't matter. You know what I'm saying? Like at the end of the day, it really won't matter because there could be a short term sell off, right? But it doesn't matter. Who the president is, right? The money's gonna move. The money's still gonna move. These stocks are still the tech stocks are still gonna pump. They're still gonna keep going up. The stock, it's not like regardless of who it is, it's still gonna go.
mm-hmm.
And I think that that's what we do need to keep in mind is that there, like you said, there might be a short term sell off, but it's not like it's just going to go down for 4, 5, 6 straight years.
Yeah,
Like we're going to recover somehow, some way.
and I mean I'm gonna see it as it's gonna be a quick like the thing is with these sell-offs with interest rates down with Fed being so they're what is it called they're being so like I don't know I'm trying to think of the word like what is it called basically interacting they're putting their hand in the like they're constantly here to help the markets, right? So they're
Yes,
just constantly
yes.
propping
They're
up the
bailing out.
markets.
They're bailing everyone out essentially.
Yeah, there's just tons of stimulus. We're just like propping the markets up, and so interest rates gonna keep them down. Any sell off it's gonna be a quick sell off. Like
Yeah.
you're gonna see, and this is just me like predicting it. Is like what I think is the next sell off. It might be it could be election time. You win whoever gets elected. If it's Biden, I would say it'd be more of a sell off than if it's Trump, just because the Trump administration the economy has been with it for the last 4 years, so it kind of understands how it moves.
Yep.
But it could be a quick 1 to 4 week sell off, maybe a little bit longer, but it's gonna come back quick. I think it's gonna
But
come back quick.
I mean, Brandon, it really just goes back to what everybody should understand, right? It's essentially one of the biggest just pieces of finance. Long-term investor will win.
Mm-hmm.
You know, the long-term investor is going to be just fine.
Yep.
You know what I mean? Like, that's really what you need to harp on. That's what everybody needs to understand is that, you know, that the historical gain of the S&P 500, you know, 7-8% a year, you know, if that just happens every year, you know, you'll be all right. You
You're gonna
know,
be fine.
it's
Yeah.
not like you're gonna lose. You're not gonna lose money from that, right?
Mm-hmm.
And you know, as long as you understand that, right, you'll be just fine with your investing mentality at least.
Yep. 100%. 100%, baby.
I like this, man. This is enjoyable. You know, I mean, I don't know how, you know. Obviously, there's definitely always a lot to improve on, but it's fun talking about this. It's fun learning about it. You know, and
Yeah.
obviously, you know, we're not some, crazy super genius. We have to put, our whole life's work into this kind of stuff, but
Yeah.
we are going to keep learning, and we're going to get better at this. And who knows, dude? Maybe half the stuff that I said was sounded about, dumb as hell. But guess what? I'm gonna keep learning. I'm gonna learn from it. You know what I'm saying?
That's the thing.
And that's what I like.
And the good thing about doing this, right, is same thing, man. We're all gonna have opinions, and what we think today, it's not gonna be the exact same what we think literally next year, right?
100%.
And so we just gonna keep learning, but like it's gonna be good because we're gonna be able to have this stuff. It's gonna be documented. We're gonna have it, and we're gonna be able to learn even more from it, right?
100%, Brandon.
So I mean, it's just a ride, right? And, I mean, my goal is just get better personally at understanding markets.
Right? I mean, like, you can't. What are you gonna do? You're just gonna put blind. You can't put blind trust into everything, right? Into the things that you're passionate about, especially, right?
Mhm.
You don't just want to look at somebody and be like, "Oh, that's what I should do because he's doing it." You need to understand why. You need to understand. What is behind the market.
Mhm.
And hopefully, that's the point where we can get. It's like, why is this happening?
Yep.
I think that's that's what I'm excited about. That's what we just got to keep doing it, man. Just
That's the
gotta keep
mission.
learning.
That's the mission. We got to find out the why and then execute. Find out the why and then have confident execution. That's it.
I like it, BJ.
So I mean, we're gonna be keep pumping these out. I mean, we'll be pumping these out.
Put a little bit of content out, just see how it goes.
Some will be in the middle of the day, right? Obviously, today's a Saturday when we're recording this.
Yeah, like a little Friday action or something.
Yeah, like some little lottos.
Little midweek. Yeah.
Yeah. So.
Bro, did you see that there was oh dude, there was some kind of Oracle $65 calls for 25
I
cents.
saw that. Yeah. What is Oracle?
Oh
What did it end
goodness.
on Friday?
I think it was like 59.
There's also some big calls in Apple, dude. Next week expiration. Yeah, it's 59.75.
Because if the deal goes through, oh my goodness, that's
See,
65, no doubt.
Yeah. It's weird though because this week, right? It was Monday or Tuesday, and it said like, "All right, Oracle's got done the deal's in. Oracle's got the deal that's just going to the president now." And it was a pretty confident like news headline.
Yeah.
And the stock really didn't like do much.
Move up that much. Interesting.
And like with all these talks and it kind of narrowing down to obviously Microsoft, Walmart, Oracle. Now Microsoft's kind of out of it. Walmart and Oracle potentially coming in together on a deal. Like, I feel like they've been it's been being baked in. I feel like, and
You think so?
and okay, what happens, right? Monday or Sunday or something, pre-market, whatever. Trump says, deal's done. TikTok, Oracle.
Yeah.
It's good.
Out the window.
Right? Yes.
All options out the window.
Boom.
Yeah.
But could it just sell off after that? After all the hype? Could it be a pretty heavy sell-off? I mean,
I'm sure.
how much of Oracle's individual price change has been solely because of a TikTok deal?
Yeah.
And is the deal that does get done, is it enough to satisfy the investors at these price levels? Because the deal is kind of, it's been initially, TikTok needs to be 100% owned by a U.S. company.
So now 51%.
Now it's 51% or whatever.
Yeah.
Right? Maybe then it's maybe just Oracle maybe not even want 51%, but as long as all of the shareholders combined to US alone is 51%, so private
And
equity.
in that right there, I think just shows how much politics has played, you
Yep.
know, is played into this, right? And
Hmm.
that not to say that it's scary or what, I think that's always how it is. It's always how it will be. But I mean, that definitely plays a part. You know what I'm saying?
Yeah, and if TikTok is solely Oracle, like the only thing that they're doing for TikTok is hosting the data on Oracle servers, is that worth the the valuation that's moved up since? Like, is that satisfying that?
I mean, with this, day in information based technology, it might, it just might, right? Just because the amount of data that they'll be able to sell, the amount of profit that people think, the company will be able to generate through it, it just might.
Yeah, it's like, but then it's kind of like, okay, is Oracle only getting the server client, the client on the server,
Yeah, like what are
or
the
are they
specifics
getting
behind the deal?
data that they can then
Like, yeah,
go
like do
and
they
do
do they
with?
now own the data, or do they
Hmm.
just have the rights to host?
Yeah,
They gotta they probably have the data, because I would probably
yeah,
venture to say that with any company that goes with cloud-based services, there's probably some deals done within the cloud-based services to where they get to keep some of the data, certain aspects. I would definitely venture to say that, yeah, that's
I
probably
would
how it's
hope
gonna go
so. I mean, I would hope so. You
as
know.
far as a stock owner perspective, right?
Hmm.
And
Yeah.
then and then you can go for, to any kind of whether you feel comfortable giving your information away from a consumer perspective, right?
Hmm.
Facebook, Microsoft, Snapchat, all these kind of companies, social media companies, but that's for the consumer to decide
Yep. 100%.
and to learn about at least.
Hmm. Yeah, but it's gonna be an interesting play. It was interesting. Seeing like the bands and stuff more talking about that. It actually pushed down. Um, you started to see like Snapchat, different apps starting to like get hurt a little bit. They started to sell off a little bit because of the talks about maybe this TikTok deal won't get done, and that the administration is going to come down even more on data privacy, and things like that. So you started to see like Snapchat was one of the ones that started selling off. When Oracle, freaking
What's Snapchat sticker?
Snap.
It's just not.
Another thing that I gotta really learn, man, is unusual options. Like I gotta really understand. Like I need to see. I might have to get one of these subscriptions, honestly.
Yeah.
Um, because I was looking like for option screeners, right? Just to basically screen huge lots coming in. But because that's such a big play, bro.
So wait, so real quick, so where do you see these trades happening?
I think it's just screeners.
But like you and me, like we can see
Yeah,
like an options trade.
like when we can see the like in the order books and everything like that. Like
Yeah, but like, that's what I'm saying. Like where at? How can we go see that?
it's on it should be on TD Ameritrade. What the heck? Like people calling me. Um it should be on TD Ameritrade's, but there's also like on like actual the stock exchange, like the New York Stock Exchange, they
Yeah.
have like books like and you but you have to subscribe to it or whatever. I mean, I see like barchart.com. And this is like for unusual options activity. Oh, damn. The first one, dang. Snapchat was the first one that pulled up. 23.82. Strike. So the strike price was $21. 30,000 contracts.
For 21?
Strike price a bid of $1.25.
That's kind of expensive.
They spent $1.37. Yeah, that's a big ass trade, bro.
That's kind of, I mean,
Like 30,000. Let's see.
they're expecting a big sell off this. When does it expire?
These are the November 20th.
Damn.
November 20th.
Snapchat absolutely took off after their earnings. After their earnings came out, during the pandemic, just popped off.
$1.37 times 100 times 30,201. Oh yeah, that's a $4 million trade.
On a bear market right now.
It's a put though. It's a put.
Oh, okay.
But it's a bullish put, man. I mean, Snapchat's right now is at 23.82.
Yeah.
So, that's a bullish put, man. Phew.
Man, it's going to be fun to learn about, man.
Yeah, I'm really excited to learn about the options. Big time. Because that's just going to give us so much more insight.
Yeah, almost see it.
Oh, hey, did you let your you know how we were doing the demo, like the paper trading?
Oh, yeah.
Did you let it expire?
Yeah, I feel like I did not sell it off because I haven't checked it up.
I didn't either.
Yeah. We can check it after we're done here.
It might have honestly expired out of the money. But
Probably did.
one of them. I think we did a couple that were in the money.
What was Tesla's? What's it at right now?
It's at 444, I think. 445.
Yeah, I feel like mine probably expired out of the money then.
Yeah, I think we were playing with like 465, 460 calls.
Yeah, I remember that. It was 460. Hey, so I think that kind of wraps it up. What do you think?
Yeah, man, this is the first
Good little wrap up.
the first session. What did you say we called this thing again?
The bull movement.
The bull movement.
The bull movement, right? So you got to play on the little stock market, right?
Mm-hmm.
So we can obviously bring in anything into it, right?
Anything.
It's ours to make, right? You can bring anything into it. But like I said, the bull movement, right? We're bullish on the market. Stocks go up. It's the only way they can go.
Stocks only
They
they're
can't,
going
they can't
up.
go down. They
No.
can't go down.
And if they do, you just buy more, man. That's it. But yeah,
Because, why are you buying more? Because they're gonna go up, right?
it's gonna go up. I mean, it's the bull movement.